Welcome to RIMScast Canada, a video podcast produced by RIMS, exploring the evolving risk landscape in Canada today. This series will be hosted in 2026 by Aaron Laconi, RIMS Canada National Conference Committee Chair. I'm your producer and co-host, Justin Smullison, Business Content Manager here at RIMS, the Risk and Insurance Management Society. Our mission with RIMScast Canada is to provide perspective from experienced risk professionals in Canada to further educate and inform the Canadian and global risk communities. We have the ideal guest to help us carry out that mission today. Darius Delon is a former president of the Southern Alberta chapter of RIMS. He is a RIMS-CRMP holder. He is an instructor for risk management courses at Bow Valley College in Calgary. He founded his company, Risk Management 101, and he's the host of the video podcast series Rolling with Risk Managers, which you can find on YouTube. He is here to share perspectives on the insurance market, how to handle fluctuations, and provide some sound risk philosophies. Let's get to it. Darius Delon, welcome to RIMScast Canada.
Welcome, Darius, to RIMScast Canada. It is so great to see you and have you online today. A few questions for you from our wonderful viewers. From your perspective, are we truly in a soft market right now here in Canada? And if so, what are the key indicators that you're seeing that signal this shift?
Well, thanks, Aaron. I think we've been in a portion of a softening market for a while now. I was doing some work with IBC when we first started to see softening, because that's always that word. Is everything just increasing? And when do you see the first indications of increases slowing or numbers not being as high as before or flattening? And then, of course, going into soft. So from my perspective, with the things that I've worked on, which is kind of a lot of real estate pieces, I've seen that softening since, pretty much the end of 22, but the start of that cycle, as opposed to, dropping like a cliff.
Yeah.
So indications of, and then I think we then started to see kind of spread in 23, 24, 24, I think, definitely it was softening market, lots of lines. Are there some lines that are still kind of holding steady? I think so, right? We're always going to have some lines that,
Consistent.
and for a while there, we had cyber that was holding its own and still remaining on the hard side. But even, cyber has now softened as capital just enters the market, more people competing and more people going, well, we want some good return on equity. So let's, look to that space. Maybe we can do it better. We have some good products, good processes, good controls in place, and then competition. We can do it better than the next group. So competition is great.
So do you think then that those soft markets are creating a false sense of security for executives? I mean, a lot of executives think maybe risk is less expensive or perhaps less severe than it really is.
Very much.
Right?
I kind of equate it to the cost of risk, right?
Mhm.
So whatever the total cost of risk is how kind of executives can kind of look at it on a scale, right? So if I can't get insurance, right, or
Mhm.
insurance is very expensive for the limits that I want, I have to do more work from a risk control perspective. However, I'm going to mitigate that risk. Some of those mitigations are expensive.
Yeah.
Labor is expensive. Introducing new processes is expensive. If you have a new process and it continues on, maybe that's sustainable. But if you're using labor or some other tools, you're increasing your total cost of risk. So when it turns around and pricing goes down, so I would have to make a decision to say, okay, do I want all that labor, all that extra cost, or do I go with some sort of a balanced approach of maybe I won't be as so hard into the risk avoidance space, or
Right.
prevention space. So
Mhm.
maybe, I won't have a 24-hour shift doing something. I'll have it doing it for 16 hours. So I save a little bit of money and transfer a little bit of that frequency or severity back to the insurer. But from my perspective, I'd always say, you know what, don't take all those controls out. You still want to not have an incident, And I think some firms are pretty good now, especially risk managed firms. It's like, well, no, we balance it. But perhaps smaller, mid-market, non-risk managed firms are, it's more of a dollar issue. And, can we invest it somewhere else, make us money instead of having it as an expense?
And do you find that that's becoming more of a prevalent problem as the world turns?
In Canada, no. Or
Okay.
with the people that I've been talking to in Canada, no. I think the Canadian insurance market's pretty safe and secure, right? So I think the quality of it is good. I think everyone thinks the quality of it is pretty good. I mean, they'll have their gripes on, this claim didn't get paid to this degree. Okay, fine, but what did you actually get? And what's the delta between what you expect and what you get? Um, so I think the quality of the product's pretty good in Canada overall. It's it's the pricing. When it was hard, it was difficult. People had to make difficult decisions. The softening of it, how do we take advantage of it? What do we do? What's our next step? You need to adapt within the a business sector and within risk management. Whatever your plan was last year, is it the same plan? If you're holding steady, you're just kind of grateful that you have some coverage in place as a risk manager last year, and then you go, well, I think I'll do the same this year. Well, I think this year, time is to look at it again, review what you have, review how it's being delivered, review the services you need. Um, you know, if I can get a reduction in some of my insurance premiums, but actually get a increase in some of the services, so I have the same budget, but I can do other things with it, right? And
Yeah.
I think from an RM standpoint, I like the ability to have a budget, manage that budget to the best benefit of my client.
Mhm.
Right? So not just make it all about the insurance premium, but make
Yeah.
it about the risk management for the entire company. How much does it cost? What do we achieve? And is it sustainable going long term? Because the last thing I want to see is in another number of years, oh, we have another 30% increase. Is it because of our claims or is it just because of the claims globally or whatever the reason rationale is for the increases again?
And that's a really good point about that whole sustainability piece because we could quickly shift at any point in time. So thinking about the soft market now, what do you feel are the biggest risks or triggers that could shift us back into that hard market? That 30% you were just talking to. And then how prepared should Canadian organizations be for that turn should it come in the near future?
I'm just gray enough to have seen a couple hard markets. I will say a couple.
No, we won't say that. Silver,
Um,
silver.
silver, yeah. I don't think everyone agrees. Uh, but the hard soft market cycle has always been kind of long. A 3-year, 4-year hard market cycle going up, perhaps a 15-year cycle on the down, going down, staying on the ground before it moves back up again. Is there possibilities for that to change? I think there is. There's a number of factors though, and I've done a little bit of research into, kind of what led up to hard markets. And,
Okay.
there's a number of different things. One is return on equity for insurers,
Yep.
and not one insurer. Just because one insurer has a bad year doesn't mean actually anything. But, as an industry average in Canada or the US, and the US does drive a lot of this, if the return on equity is far below the average return on equity for other investment options, right? Then it's like, okay, well, we're lagging behind. Okay, what's going on?
Mhm.
1 year, okay, it could be, catastrophic losses throughout whatever's happening. Maybe you tweak your reinsurance treaties. But, if you have 2 years and then, I think the real trigger is if you have really 3 years of low return on equity. uh,
Yeah.
it becomes a real big issue, and there has to be some sort of real change, and that's industry. So I used to call it low single digits, right? And that's not actually accurate because it could be low double digits depending on the market conditions, right? But
Yeah.
if it's 2-3%, that sucks for everyone. And you do
Totally.
it 2 or 3 years, okay, that's not good. You have to right size your underwriting, and you're probably at the state of saying, you know what? We don't care. It's this price or we're not going to take it. And the industry has to do that. Like not just one, but all. When all say the same thing, it's then all of a sudden a hard market. But I've seen the newcomers come into the market kind of with a couple $1 billion in hand going, okay, I like this market. I think there's an opportunity. And well, that's business, right? Competition, opportunity, and deployment of capital. So, hey, I'm going to deploy my capital. If you're not going to take it, I'm going to take it. I still think I can make $1 on it, but also because probably they have a different take on it. And, I've seen a lot of differences in cyber, right? So a lot of people are having a different take on cyber currently, and I like
Yep.
it. I understand some of it. Some of the stuff's brand new, and it's like, okay, that's interesting. I'm not sure if I like it or not, but
So is it a shift that you're not liking? Like, what is it that you're not liking?
I'm silver haired, thanks to some. Some of it's getting beyond my expertise. Like it's
Uh,
advancing all the time. The security measures that, were commonplace, I can say commonplace 20 years ago, and then 10 years ago, and then 5 years ago, and, kind of coming into it now. I worry about, password protection in the age of quantum computing.
yeah.
I have a friend, and we presented actually in Calgary on cyber at the Calgary RIMS conference, and then he actually said some things that actually surprised me in the speed of quantum computing, being able to actually um, figure out your passwords in seconds, what would have been years before with a brute force attack. And now, if you think about it, we know, it's coming, but we have all these systems in place based on non-quantum computing. So
Mm,
we have to shore up these systems now for the eventual quantum computing, that first adoptee of that from a hacker perspective that gets access to great computing powers and starts going after all those firms. I mean, your priority firms, right? But if you're not there that first day that clock uh, strikes midnight, that's gonna be dangerous, and we're 10 years away before. Are we 3 or 4 years away now from quantum computing and that being an issue? And I'm a little worried. I don't know that we're all prepared for that, so everyone's password, it's gonna be difficult, and your strategies for password protection will have to change.
hmm. That's that's very interesting. I'm a little worried myself now.
Yeah, I guess. Just to spread worry throughout the world, that's why I'm here.
Absolutely.
It's time to plug our two favorite events here at RIMS. This is a last call for you to register for Risk World, which will be held May 3rd through the 6th, 2026 in Philadelphia. Connect, cultivate, and collaborate with 10,000 of your peers at the world's largest risk management event. Visit rims.org/riskworld today and register. And folks, save the dates, October 18th through the 21st, because we want to see you at the RIMS Canada Conference in Quebec City for the 50th anniversary of the RIMS Canada Conference. Visit rimscanadaconference.ca for more information. The call for educational content submissions is now open, and it will run through May 8th. That date is rapidly approaching, so be sure to submit your session, and good luck. And now let's return to our interview with Darius Delon.
Welcome back. Darius, if you could give one piece of advice to managers, brokers, and or insurers to future-proof their strategy through cycles, what would it be?
I think the strategy isn't one fold. It's a multifold strategy going forward because, there's so many outside um, factors that impact performance, from catastrophic losses, wildfire, earthquake, hurricanes, what have you. You could be doing everything right as an insurer, as a broker, as an RM, and all of a sudden outside forces, throw you off or offside for whatever reason. And that's why I actually go back to adaptability, like
Okay.
adapting strategy as you go along. Like if you only have one strategy for the next 20 years as an insurer in Canada, right? You're going to get hit hard by something that's going to blindside you, whether it's the hardening of the market, the softening of the market, the leveling off of the market, or some catastrophic event. And, what is your strategy? Well, maybe for the next year, for the next 2 years, the strategy is, hard competition to, gain further market share,
Right.
right? But, then
Yep.
what's the strategy after that? Well, perhaps, updating systems so that it's more sustainable and maybe trimmer, more data enabled decision making. Like, those strategies have to adapt. Like, we can't just say we're going to have the same exact hard market, soft market flow. It's
Yep.
going to be different again. I think it'll still flow hard and soft, but at the time, everyone has to adapt their strategies. Brokers have to adapt. During the hard market, there's some benefits to brokers in a hard market, and there's some really hard competition that has to go on during a soft market to show value for clients, right? And everyone's competing for that same book of business, right? We have some
Agree.
innovation, some growth, but you can't just say, "Well, we're going to get all the new players, and that will be our growth." You're taking someone else's client, so adapt. How are you going to adapt to that? What are your strengths? What services will you offer? So from the broker side, and, I've always said this on the broker side. From the broker side, it's, how are you advising? What are you advising? Are you expanding your advising group? And personally, I'd actually like to see insurers take a different look at advising for clients. I've had
Okay.
some conversations with different insurers, and okay, a little bit off course, but at the same time, I've worked as an underwriter before, and I've had loss control, because that's what we called them back then, go out to our clients, but they're always the bigger clients. It's always the 20% clients, so the biggest premiums, because that's what
Right.
you justify with,
Yep.
right? But that's, maybe a small handful number of clients, and you go, okay, we looked at them, they have a big severity risk, we reduce the severity risk. But if we were to perhaps um, broaden who we actually do risk control for or loss control for,
Okay.
some of the more mid-market clients or even some of the smaller clients, and, maybe not a full package of loss control, however, an improved package of where we stand now, which might be very little, or it might be dependent on somewhat of what the brokers are offering.
Right.
And some brokerages have a lot of good risk control content, right? They have some of their own people, but some also in the mid-market don't. Right? So how are you determining who gets some good loss control advice? Right? Not everyone has the ability to actually have a risk management consultant,
It's
right?
true.
So that advisor, it's even more important for that advisor to come in and say, "Well, look, this is what we think you should do." And what'll happen is you won't have a loss, or your losses will be less frequent, right? And then you talk to the client, and it's like, "Well, why should I spend that money there if I could just use insurance?" Well, we don't want you to do that.
That's
We
right.
want you to be successful and sustainable,
That's
and
right.
here's why, and the rationale. It's like, "Oh, that kinda makes sense. Yes, I agree, that's what we should do," but it's a longer conversation. It's a lot more work,
It
right?
is. It's
And
that, those early learnings around insurance is supposed to be the last resort. Good risk management should always be the first.
yeah, it's not a piggy bank where you put some money in, take some money out later on, right? Because that doesn't work at all. But
No.
I've seen over and over again, especially back when the hard market started in the condo sector,
Mhm.
where, condo associations were looking at the insurance policy as a piggy bank. If I pay in 100 grand, I should be taking it out 100 grand at least, right? Make it worthwhile. Well, now you're paying two or $300,000 the next year, and so on and so forth. So, you know, and they're built-in ideas, right? It's just because
Yeah.
we haven't actually educated people to go, "Oh, this is maybe how I should approach it, with better, risk management techniques, and more sustainable." This way, over a long period of time, I spend a very manageable budget, right? For me, it's always been about budget.
Yeah, right, you're right. And so when the market inevitably hardens again, so who's gonna own the consequences of those decisions, right? So we make those decisions, right? The client, the broker, or the insurer. And, as we talked just a second ago about the risk management portion of that, when it hardens, who's gonna own those consequences if you chose one over the other or supported one more than the other?
Well, it's an interesting question. Like, my first blush thought is, well, it can't be the client, but it can be the client. Like we think,
Okay.
what is insurance? Who owns insurance? It's the insurer, right? They provide the capital. Okay. They're
Mhm.
controlling it. They're controlling the pricing. They're controlling the claims. They're controlling what they can within the environment for it. Well, and then the broker, what role does a broker have? Well, the broker's role is different as it goes forward, right? Providing lots of advice, less advice. Some brokers are more transactional, home, auto, some more service oriented with commercial, large commercial.
Yep.
And then I'm thinking about the clients. Clients actually have a bigger say than I was originally thinking with regards to this because
Mhm.
back in the old days, even before I was in insurance,
The
when
old
ano
days.
yeah, yeah, when another hard market happened in the '80s,
Mhm.
what followed that was the advent of captives,
Right.
right? So a
Right.
whole group of clients left the marketplace, right? And that's really kind of one of the competitive forces. If a client goes out and gets their own captive and they're kind of committed, they can't ping pong back and forth between a captive and going
Yep.
back into the brokerage force. They're
Yeah, they're
they're
committed.
committed for whatever reasons, right? So, Curie has a reciprocal for universities. Every university that goes into that reciprocal stays in that reciprocal. Actually, I
Mhm.
don't know of one that's left, so it just gets bigger,
Yeah.
right? So then I also think if you look at those clients and you compare it against insurers, what are insurers competing against? Sometimes they're actually competing against the lack of coverage and clients kind of taking their figuring out their own coverage and taking those billions of dollars off the table as part of an insurable service, right?
So then
So it goes in
yeah.
full circle to a degree for some clients, not for all though.
Yeah, so that kinda leads into my next question on why do we keep repeating these same market cycle patterns? And then is there anything that we could realistically do to break the cycle? So,
If
is
I could
there?
ever figure that out, I might be perhaps a rich person.
Oh, take me with you. So what could we do? What could we do to break the cycle? I mean, these patterns just seem to be continuous, right?
Well, okay, so I see some consistency within the patterns in terms of hard and soft,
Yeah.
right? But I've also taken a look at those same patterns and said, well, they're not exactly the same, right? The responses are different. The marketplace is different. The catastrophic losses are again different.
Yeah.
Um, Availability capital kind of changes as the market moves. At a certain point in time, after '08, the price of capital was cheap. And, those were long periods of time where the price of capital was really cheap. So, to say we always fall back, I don't know that we will always fall back. I do think we probably will fall back,
Okay.
but some of the market forces that bring us to fall back won't necessarily be all the same, right? So how do we, in our own individual businesses, kind of manage it from that perspective? Your answer as a broker is totally different from an insurer. Right, an insurer's answer has nothing to do necessarily with a client's answer. A client looking at the marketplace goes, "Well, I'm, a small mom and pop grocery store. How do I survive if something big happens and, there's a riot on the streets of whatever city because a hockey team doesn't win?" Sorry, Aaron.
Been
That
there.
might have been
Yeah,
a shot.
been there. Ouch.
But, like, those are all the things that impact those small and, mid-market, clients. What will be the next thing that, impacts them? Why are they buying insurance, right? Like, they have their reasons for buying insurance, and are we aware of what their reasons are? And, if it's, piggy bank with a little bit of money in, I pull it out, well, let me kinda educate you on a better, approach to that than what you're thinking right now.
Well, and it goes back to your earlier comment about multi-layer strategies and being fluid with
Yeah.
what's happening around and how you're really assessing your risks and not just again, these are the 5 risks that I have, these are the 5 risks I can mitigate, these are the 5 ways I can do so, but really being fluid on the things that could happen, could help break that cycle, possibly,
Yeah,
right?
exactly. Yeah.
Awesome. Okay, so Darius, last question because I'm very grateful for your time and I know we're almost up. We can see that you have your RIMS CRMP next to your name. And I know that you've had it for a few years now, but how long have you had it and how has it helped your career?
Well, I was part of the group that did the first examining for the RIMS-CRMP. Kind of a little bit before we had some education and some resources for it. So I was back in 2016 in San Diego. Great experience, great RIMS conference in San Diego. I love that conference. Love the weather in San Diego. I gotta say, um, you know, people have asked me a lot about how does it change my career. Um, one, there's an element of confidence that comes with it.
Okay.
A lot of people did go through that exam process, and I was able to pass. Okay, so for me, it kind of gives me that satisfaction of saying, okay, I was examined hard on things that are very specific to being a risk manager,
Okay.
and I was able to pass. And it's like, okay, so am I a risk manager now? Like, there's that sometimes that little bit of self doubt. How good are you? Well, you kind of overcome that. Okay, you have that. How can you use that? And kind of using kind of the confidence that comes with that, kind of your decision making, and going, this is a good, risk managed program. How do I know? Well, others have told me I know what I'm talking about, right? Either through examination or for clients or what have you. So it kind of just goes on from there. And I think, like, going forward now, I really would recommend all those, and I know there's a plethora of people in Canada with their CRM.
Hmm.
And I would say everyone with their CRM should actually challenge, with some, go through some courses because there's now course availability. There's some other resources that are available, and take that examination and be a certified risk manager, right? Because that CRM is the designation and this is the certification. So this is similar to a CPA. And I've been in this industry for a long time. I'd love it if someone goes, "Oh yeah, you're a CPA or a, CRMP or something." Right? Those are
Hmm.
the same thing. Awesome. Thanks for confusing me with a CPA because it is a high standard.
Thursday, I'd like to do a little throwback here to this
Oh my
picture
goodness.
right here. This was in Ottawa in 2023, and look at those smiles right there from the winning team of the inaugural RIMS Canada, RIMS Canada chapter feud.
Oh my.
And I think I knew Darius through reputation prior to this, but I hadn't met him. And as you can see, my career has progressed. I was a game show host 3 years ago, and now I'm doing audio only podcasting with you. Anyway, the point is, any fond memories from this day?
Well,
Well,
the West won. All that has to be said.
How
yeah,
the West
we
won.
were number one. Yeah, how the West was
We're
won.
Well, I'll just start. You can see in the back there. It's really tough to see, but there's a booth back there of a very professional audio and video crew who did a tremendous job with the stage and the lighting and the sound. We had the real Family Feud music. We had a real game board up on the top. We had two screens, right? And from what I recall, we were not drinking, but we were partying like we had been, right?
We sure were. I'm pretty sure I tried to buy a vowel.
You did. You tried to use a lifeline, and you guys were so great about doing the cross arms thing to try to psych out the other team when they were going for the steal. And you were so much fun, and it's my sincere hope that we have a chance to do this again. And there's Darius, there's Catherine DeWall, there's Aaron in the middle. Is that Tanya Stegmeyer in the middle?
That is.
Yep.
Yep, that's
And then
Tanya.
there's Miles
Miles
Barber.
Barber.
And then all the way in the back there, of course, because he's got to be everywhere, is Noel Seaman. But
I know. I was just going to say that. It's like even Noel's with that picture.
yeah, but yeah, it was a great time, and I also think that was a great icebreaker for a lot of people. It was a different way for people to connect and get to know each other. You were all chapter leaders. We had, just to set the stage, it was 5 chapter leaders from the West and 5 chapter leaders from the East, and those were the 2 families. And I just had a really wonderful time being with you all there. And it's one of my favorite memories here at RIMS, and just generally, it's just one of my favorite memories. So it's great to see you both at the same time.
Might as well. That was a great memory because that's the only time I've ever been on a game show and the only time I've ever won on a game show. So that's top of
Hey,
my list.
yet.
Do you remember
Yes.
what
Thank you. Okay, thank you.
Lots
Do
of
you remember
time. Lots of time.
the prize was bragging rights, as I recall. That was about it. Yeah.
Yeah.
As risk managers, that's all we need. All right. That's it for today. Thank you so much, Darius, for being a part of our show today. And we'll look forward to our next episode of RIMScast Canada coming to you soon.
Special thanks again to Darius Delon of Risk Management 101 for joining us here on RIMScast. Be sure to check out Rolling with Risk Managers on YouTube. And you might see him at RIMS Canada 2026. We'll find out. And of course, special thanks to our wonderful RIMScast Canada host, Aaron Luconi. Look for a new episode every single month here on rims.org/Canada. My name is Justin Smolison, Business Content Manager here at RIMS and the host of RIMScast. Thank you for tuning in and keep coming back to the RIMS Canada homepage every month for a brand new episode of RIMScast Canada.